welcome everyone onto our second session in our Inclusive Financial Regulation and Supervision stream. And we're on to our next topic, which I'm very excited about, as you can see with this huge smile on my face. I've got an excellent panel here with me, and I'll introduce them briefly. But the title of our panel today is Policy, Regulation, and Supervision Implications of CBDCs in Emerging Market and Developing Economies. So on my panel today, I will start in no particular order, just on my screen here, on from my left, is Natasha de Teran. She is with the advisory board of the Bank of England CBDC, at the CBDC advisory board of the Bank of England. And then I've got Philile Nxumalo, who's from the Central Bank of Eswatini. She's the head of FinTech. And then on my bottom, just below me on my screen, I've got Monica Singer, who is a professor of accounting at University of Johannesburg, but she's also South African Consensys lead and worked with the South African Reserve Bank on the project COCA, the proof of concept for, wholesale payments or CBDC. So I'm excited to have an excellent panel here with you. And with me, so that we can have an interesting discussion about CBDCs, a topic which I'm very excited about, as we had our first CBDC workshop this year for regulators and had very fruitful discussions on there. So I think I'll start my first question and pose it to Natasha, who was the first one I introduced as well. Talking about a recent interview, something that you mentioned, something about CBDCs, and you said CBDCs raise hugely important questions around privacy and anonymity. And this is something that's been a great discussion around privacy and the privacy paradox actually in CBDCs and how far regulators can go. So what do you think, or in your opinion, what is the role of a central bank in protecting consumer privacy with the CBDC? And why do you think this is an important question to even think about even from the beginning, design phase, considerations, up until the end and in its progression? So let's start off there. I'm thinking about our consumer and their privacy.
Nolwazi, thank you. Thank you for the question, but thank you also for inviting me today. I think the central bank's role is smaller than you might think, smaller than one might think at the outset, because I think it's not for the central bank to decide what the privacy where the privacy dial should be set on CBDC. It's the central bank's role to find out from society at large where each society wants to set those privacy dials. I don't think the central bank can sit there in isolation and determine by itself where they're set. And why is that the case? Well, it's because a CBDC needs public trust. And that we know that the public trusts in the asset, the underlying asset, the currency. This is just the digital manifestation of the fiat currency. But they need to be able to trust, obviously in the way that it moves and it's accessible and so forth. But key is the privacy information. Who has what? Who has access to what under what conditions? And society at large needs to make those decisions. I don't know that we will see the privacy dial set the same in all jurisdictions, because we all have different perceptions, we have different worries, we have different concerns about privacy. So we may find very, very different settings in different countries. I think the key will be that those settings still allow for value transfers to occur across borders in CBDC. Because if there's total anonymity, and it's unlikely, but were there total anonymity in one place, then I think other jurisdictions would be unable to interact with it. I think it's very important because as we moved into digital payments, we have left huge digital trails, information trails. We haven't always, as consumers, understood that. And a CBDC, if you like, offers society and central banks to level set, because central banks are not going to be monetizing our information. So whatever else, they can set the boundaries actually quite tightly on privacy. And I think they'll need to gain public trust.
Thank you for that, Natasha. And I think this leads me to a question I prepared for Philile for later on, but I think I'll ask it now because I mean you are a regulator. So how do you think this balances in then with the fear that there might be a bit of scope creep in development of CBDCs within central bankers because there's the mandate, a scope creep within the mandate of a central bank because there's the mandate of monetary and financial stability. And we all agree on that, and most central banks have that mandate. But now, with the chance of having so much consumer data, there might be the mandate of creep of financial integrity, where financial integrity is a function of the central bank, but it is not the mandate. So, how do you think that can be balanced and to ensure that AML and CFT requirements are being met, but now the privacy line isn't being crossed, and the consumer remains protected? Because as Natasha did say, yes, the central bank is not making money out of this, but the consumer still needs to feel safe.
Okay, thank you, Nolwazi, and thank you once more for the opportunity to be part of this panel. Much appreciated. I think when we talk about balancing the mandate of the central bank against the need, against the decision, to roll out a CBDC, a lot hangs on the design of how you design the CBDC to play in the market. And one of the things that ought to be top of mind for a regulator is, of course, how do we maintain our independence, even perhaps some of the information that now falls into the space of the central bank and what our obligations might be regarding that information. As I see it, I think the legal framework, that sort of sets the rules of the game is very important. Quite important to make sure that you are defining roles and responsibilities in the design of the CBDC. And, possibly this needs to go together with a consideration of what then is the technical spec. I know that in some countries, they go with the two-tiered approach where the banks still play a role and sort of the central bank issues the CBDC, but the distribution bit, lies with the banks. So as I see it, the legal framework is very important to define the roles, but this must then flow into the technical spec of the CBDC, where perhaps a better way to do it is that two-tiered model where the banks continue to play a role as they do now, and you don't get sort of this influx of information that necessarily sits with the central bank and gives rise to reporting obligations, etc., from an AML perspective. So, sort of in a nutshell, that is how I see it.
All right. Thank you so much, Philile. I think that's a good way to think about it. Depending on how it's issued, then you'll see whether the scope creep of the mandate might be a challenge in a jurisdiction. This leads me to then a question, because now we start to think about the trust element as well of the consumer of the CBDC, to a question I have for Monica, where in a 2020 blog post, she mentioned that most developing countries can't afford deposit insurance, and that a CBDC controls the depositors over, could give control to the depositors over their funds without having to suffer counterparty risk. So how do you think central banks can mitigate against the risk of bank runs when introducing a more attractive CBDC? But this is assuming now that they trust it. So let's take the notion that we're in a world where could a bank run be triggered if the people don't trust it? Now this is this monolith that has been built, and if it's built and they trust it, how could you advise central banks to mitigate against these risks? Again, we're still thinking about our consumer here and about their behavior. First, we started off with the privacy. Now we're looking at the mandate creep at AML, and privacy again is still the threat. And again, we're still looking at the trust level, because privacy has often been a thread around how much they trust their governments to uptake this new currency that their authorities issuing.
Okay. Thank you, Nolwazi. At the end of the day, the most important thing people must know, which is that the CBDC is a liability on the central banks. When the legacy markets were created, we made it compulsory for citizens to open bank accounts if they wanted to operate, if they did not want to operate with cash. And this has always been a concern because, as we know, in developing countries, you are exposing the citizens to what we call counterparty risk. What's your counterparty risk? That you now choose a bank and the bank goes under and you lose your deposits. We have seen in South Africa recently, a bank called VBS, the money disappeared. So, and why? Because the system is broken. Because we know that there's no amount of audits, no amount of regulation that can resolve when you have management that is corrupt. So you are sending your citizens to the slaughter. There's no deposit insurance. They have to open a bank account if they want to operate, and then the bank goes under. But for the first time in history, we can change this. We can offer something, a digital coin, to the citizens that the liability is on the central bank. And we know when we study finance that one of the lowest risks is a liability on the central bank. So the other thing that's going to happen is central banks know that what they have to do is to try to encourage people to use the central bank digital currency. So for example, I can predict that they're not going to charge for this, and they're going to make it easier, and they're going to educate them, and they're going to offer them a wallet. And I predict that I believe those that do it properly will always have the interest of the citizens at heart. And I love what Natasha said, saying, we're not here to tell whether we're going to protect privacy or not. We're here to listen to the people, and we're going to do what the people want. And that's exactly the attitude that I hope the central banks around the world will take this opportunity, because we have a once in a lifetime chance to make a massive difference. And let's also not forget, central banks are going to compete with with stable coins. They're going to compete with cryptocurrencies. And that's why they have to bring the central bank digital currency at a retail level to everybody. And I'm hoping that we're going to start educating the young ones, that every single child should be able to understand how to use this currency. They should be able to understand about money. The understanding of what money is should not be left just to the financial accountants and the experts. Everybody uses money. Everybody should know how to use money. And we should have methods so that even when we give donations, we should be able to give donations real time to the poorest of the poorest. And not because people cannot have an identity or don't have a proof of address, that we cannot bring them as part of the economy, because that's what we did. Nobody cared. Let's be honest. When you boil it down, we have 1.7 billion people out of the economy in the world because we were totally obsessed about the banking system. It started with the Medicis, and after that, nobody actually gave a damn. So now we know that we have a once-in-a-lifetime opportunity, not only to bring the unbanked, to create the underbanked, to bring them and to make sure that, like in South Africa, people are receiving the money in their accounts, and then the next day they take the money out. That's not good enough. That is the underbanked, the people that don't really are part of the economy, that they're not able to create wealth. And for the first time, I truly believe that if central banks care about their people and about the citizens of the country and the citizens of the world, because these central bank digital currencies should be interoperable. They should be able to be transferred. We should educate people as to when to use a CBDC, when to use a crypto, when to use a stable coin, and they should have options, and they all should be completely integrated. And then if we do this, then I don't really think that that we're going to be doing the wrong thing. I really truly believe it's all about the intent and really about meeting the needs of the people, and this is a chance to do it. Thank you.
Thank you, Monica. And I'm so glad that all three of you are saying the same thing about we must meet, we must also do this, we must, in the sense that you're all agreeing that it's a collaborative effort. We must collaborate to make sure that we make it a successful product that meets the consumer at their point of need. So because this leads me to my next question for Philile, which is around, effective stakeholder collaboration is important in designing your CBDC. So I'd like to ask you to break this down for us, because you've lived the experience, and take us through it, because as everyone would agree, stakeholder collaboration tends to be a big challenge in any project, not just a CBDC journey. So can you take us through the path that Eswatini is taking, or on the journey of which stakeholders should you think should be engaged when designing or thinking about a CBDC, and how often should they be engaged, and why are you engaging them? And just, can you please take us through that? And obviously, can I also invite Natasha and Monica to add on from their experiences, because this stakeholder discussion, I think, is a very important one, as we all know that many people always cite. I remember we did a study on inclusive integrity and on conducting national risk assessments and mutual evaluations, that stakeholder collaboration was a big challenge. Another study I was conducting, stakeholder collaboration was our biggest challenge. So I think this is one I'd like us to spend a bit of time on, because it proves to be a consistent challenge across even different programs or different projects that have been conducted. So I'll hand over to you, Philile.
Okay, thank you, Nolwazi. And you are correct. This is a very important consideration. At the beginning of our sort of journey into CBDC, we saw the need to, first of all, carry out a consultative forum where we brought together the larger part of our external stakeholders. And this was largely the industry. It was consultants. It was, potential users of a CBDC. It was representatives from government, from the tax authorities, sort of all the external stakeholders that we knew to be key in having this discussion. That consultative forum was great because it assisted us to crystallize sort of the different worries or anxieties that everyone had around the table around what a CBDC is and the potential changes it could bring to the market. That discussion assisted us to then move to the next stage, which was to then try and put together a study that would say, given who we are as a country, how we behave, how we operate, the size of our industry, the volume of transactions, our financial inclusion stats, and so on and so forth, will it be feasible to actually go ahead and prepare to issue a CBDC? At this point, I must then mention that one of the key mistakes that I think I can share out of this whole process is the fact that while that external, bigger stakeholder engagement was happening, we probably missed a spot internally, because you started to then get, in a central bank, everyone is sort of divided, perhaps across the different mandates or objectives of the bank. You sort of started to get that anxiety that says, a CBDC is not important from a monetary policy perspective. It's not important from a payments modernization perspective. For regulation and supervision, this is not the way to go, et cetera, et cetera. So that internal stakeholder engagement turned out to be that blind spot for us. And we've then had to backtrack and spend quite a bit of time tying this whole thing back together to the mandate of the bank as executed within the various departments to say, when we talk about CBDC, how does it play out in the payments oversight space? How does it play itself out in the research for your currency department, etc.? So that that getting that alignment internally, has, made us to be able to, sort of cover up quite a bit of the ground that we lost at that initial stage when we perhaps just focused a lot on, the market. How will the market perceive this? Where are the biggest gains from a market perspective and all that kind of thing. I'm not sure what the other ladies will share around that stakeholder engagement, but I think from my perspective, that is the key learning that, great to strike a balance while that external stakeholder engagement is happening. There needs to be alignment, even within the regulator, making sure that in terms of the various mandates of the bank, you don't get conflicting objectives and goals.
Thank you, Philile. That was very insightful, that apart from inter-stakeholder collaboration, you need to look at your intra-stakeholder collaboration. So those two need to be a balancing act as you think about CBDCs in our discussion today. Natasha or Monica?
I think there's, I think there's two other balancing acts that have to take place. As Monica was referring to earlier, the interoperability of the CBDC with stable coins and existing payment systems in a plural environment anyway is going to be key for that CBDC to be successful. So there needs to be a lot of technical stakeholder engagement. That's clear. But that cannot crowd out the societal engagement that needs to take place at the same time. No society, I think, will be ready from one day to the next to accept such a significant change without having been part of the discussions around it. Particularly as there will be some very strong opposing views, I think, and opposing views always make the loudest noise. So for sensible discussion to come through, I think you need to prepare for that and give it a lot of time. And the other area where there needs to be a little bit of a balancing act is between the national and the international. So each central bank is obviously free and will want to design the CBDC together with its citizens that suits what is needed locally. But if we're going to have interoperability, cross-border usage of CBDC in the future, each country needs to have an eye on the international sphere as well.
That is very true. More layers to our balancing act. Monica?
So I just want to bring my experience. I don't know if you're aware that 25 years ago, I was asked to transform the South African financial markets from paper to electronic. So it was like a massive undertaking with the listed companies, the brokers, the stock exchange, the regulators, the central banks, everybody together to come to a conclusion how to bring about a central securities depository, how to eliminate paper. My word of caution is, first, you mustn't allow the lowest common denominator to prevail. And second, I always said, if you set an objective, and the objective is, let's say, that you want to drain the swamp because you're going to build beautiful low-cost housing for the people, when you go in and the crocodiles start biting, don't run, number one, and don't let the crocodiles win. So why I'm saying this is because you will find a lot of crocodiles in this process. But if you keep the objective as to why you're doing this, why, then all this other noise will go away. That's number one. But you need leadership, of course, because it's very hard. And then the other thing that I would like to bring to everybody's attention is that I refer everybody back to the white paper by Satoshi Nakamoto, Creating Bitcoin. Because if you read that paper, which for me is a poetic document that talks about peer-to-peer and in a blockchain, in an immutable ledger with a shared version of the truth and the key principles that created Bitcoin, except for the fact, yes, that it's fluctuating in value, but one day it's going to become a unit of account, and therefore it will become money. So I'm saying that I hope that when we create CBDCs, we can keep to the key beautiful principles in that paper, because the truth be told is we will compete with cryptocurrencies and stable coins. So if you now invent a faster horse and not a car, like it has been already invented, then you're going to miss the opportunity to win the hearts of the people that you want them to start using your currency and your CBDC. So those are just from my personal experience, a word of caution and a plea to the people involved in building this, not to ever lose sight as to why you're doing it.
Thank you so much, ladies. We've got 5 minutes left, so as we close off, I'd like to leave you with one last question, and so you can answer it with your closing off statements as well. I told you the time flies, and the time has flown away. And thank you all so much for being with me on this amazing panel. I think my last question will be, as we close off, because I mean, CBDCs have been touted for their financial inclusion, increasing a potential in emerging market and developing economies. So how do you think they can do that or how can they be designed to achieve that in emerging markets and developing economies? And with that, that will be my thank you and goodbye to everyone who has participated in this session. Thank you. You can start, Philile.
Okay, thank you, Nolwazi. So, you know, for financial inclusion, it does become quite a compelling point to want to issue CBDC. But I think we also need to look a little bit further. I've heard Monica mention quite a number of times today that we will eventually be competing, or CBDCs will be competing with stable coins, cryptocurrencies and all that. And I think perhaps the financial inclusion discussion does also need to happen in that context, that you also want to avoid a situation where the market has moved away from sort of a regulated space, and sort of the buy-in into stable coins, cryptocurrency and all that, create an exclusion of a different type in your market, in the sense that it's not going to be all your consumers that can readily access and use that kind of a currency or medium of exchange. Therefore, the CBDC steps in to close that gap, or to complement sort of what that offering is. So by design, you almost need to go simple, in the sense that it's got to be accessible to a less sophisticated segment of your market, and really close that gap that is caused by exclusion when you get, you know, some of your market adopting, you know, the stable coins and the crypto and all that kind of thing. So from my perspective, I think that is the context under which we need to talk about financial inclusion when we think about CBDCs. So that I don't waste too much time, can I leave it there for my fellow panelists? And thank you very much for having me today.
Well, just to add, I mean, the obvious things that it needs to be easily usable on low-cost devices. There'll need to be education around it. And it's an educational opportunity, I think, as well. I mean, let's not just think of it as a slog, but even in very developed economies, financial literacy is very low. And I think the introduction of a CBDC gives the possibility and gives the imperative, but also, you know, the possibility of actually changing that and improving financial literacy, which is going to be key in this more complex monetary world that we're moving into. Obviously, low transactional fees. And then coming back to that interoperability point again, I think it's not just the CBDC, but some of the rules around stable coins and so on and so forth. But if a CBDC isn't fully interoperable with the rest of the financial system, you're creating a financial exclusion zone. Now, obviously, if a CBDC displaces everything else, then that's not a problem. But if the CBDC is coexisting with other payment systems and other currencies, then it must be fully interoperable so that the poorest and the most disenfranchised digitally can reach all corners of the economy. And
Fully agree with all the speakers. I just want to add that we must meet people where they are in. I give you an example. If in Africa, the majority of people have got mobile phones, like we know they do, let's try to find a solution that uses the mobile phone. In other countries, they don't have mobile phones. So we are already working on solutions that are actually using paper money that is going to be a CBDC when there's no internet. So I'm just saying, meet people where they are, speak their language. And if you have the right intention as to why you're doing this, you will start with the little kids at school, giving them already their little money, for their chores as a CBDC. There's already books. I've got a grandson. There's books that talks to babies on cryptocurrencies, the ABC of crypto. You don't understand how beautiful these books are. So that's all I'm asking. Meet the kids where they are. They're going to embrace it.
Oh, thank you so much to all of you and being on this amazing panel. I've enjoyed our discussion. I'm sorry we didn't have time to take the questions on the chat, but I hope you found this discussion very valuable. Thank you all so much.
thank you.
Thank you, everybody. Bye-bye.
Bye.
Thank you. Bye-bye.